Well, thankfully, I'm out of the hotel and back home again. Yay. All right, let's go ahead and get started. All right, so we got 9:45, 10 o'clock, 11:30, and then 12:30. That's the list for this morning. Not overly dramatic this week on the headlines. I've got a list here. So there was an OPEC cut announced. Just because they announce it doesn't mean they're going to follow through with it. So we still need that, right? They can bluff. And then we've got on the week, factory orders, consumer credit, and initial jobless claims. Those will be the biggest ones on the week. Today, we've got the ECB speaker, Christine Lagarde, at 9 o'clock. And she's going to be testifying before the Committee on Economic and Monetary Affairs. It's part of the European Parliament. Think of like when Powell goes in front of the House and the Senate. Then also today we got ISM services, PMI. That's going to be at 10 o'clock. Should continue to see expansion. So watch those numbers. If it comes in other than that, it'll be a surprise. Markets don't like the surprise. Then we've got other ECB speakers at 10 and 11:15. And then we've got Miser at 1:30. I was surprised by this. I thought they were in blackout mode. So when I seen that, my first thought was, well, maybe he's not a voting member, but I would still expect them to be in blackout mode. So I'm not quite sure if this is going to be live or maybe it was something that is recorded. And that matters a lot, right? If it's just some recording or if he's speaking at like Boy Scouts of America or something, then yeah, I mean, it's not expected to be anything. So on Friday, we started to see that rising tide lifts all boats, right? What we've had before Friday is this AI tech runaway monster to the upside and 5 stocks carrying the S&P 500. Well, it's called the S&P 500 because there's 500 names in it. When 5 names are doing all of the heavy lifting, at some point, the other 495 are going to weigh it down or they're going to join in. And on Friday, they finally started to join in. This can be seen from, a variety of points of view. They're joining in late to the game and they're going to start to play catch up. That'd be one point of view. Another one would be a capital rotation where maybe we come out of growth names and begin rotating back into value, or that without AI and this mega market cap liftoff, that those other names won't really even get a chance and that the entire market starts to sell off. So, there's a variety of viewpoints here, and it's really too early to try to determine which of those 3 it's going to be. And, it doesn't have to be one of those 3. It can be a mix of those 3. There is a Bank of America strategist, Michael Harnett, who gave this contrarian trade idea. So if you're kind of against AI continuing its push, then a trade that you could do opposite of that would be his call to buy HSI, sell AI, right? It's and you could hedge it with commodities, emerging markets, resources, and banks. This is the idea that, again, some kind of China stimulus or a bullish bet out of China, which last week the China state banks were ordered to focus more on the EV names. So think NIO, Li Auto, names like that, right? So this is a 5-day view of the S&P, and then in green, all of the market with calls, and in red, all of the market with puts. And so even though you can see SPY kind of topped out and went sideways, the continuation of call buying just was really strong. The thing is, if we get rid of all of these other things and just look at puts were rising strongly over the last 5 days, right? So it's not that we're not getting puts or we're not seeing puts traded. It's just once you put calls on there, puts don't really look like we're getting much done, right? So a little bit of perspective. So we can see using FX Street, Christine Lagarde's got a really high impact anticipation. And then ISM Services PMI is another one with a high impact expectation. We are going to get some numbers out of Japan today, but that'll be later tonight. So it's something to think about for tomorrow. We do have auctions at 11:30. And here's that Fed Mester is going to deliver a brief welcome remark at the Council for Economic Education. So yeah, he's going to be speaking, but there's no Q&A. And I don't think it goes against their blackout period. So probably why he is able to get away with it. On earnings this week, JM Smucker, GameStop, NEO, those are some that are kind of on my list. And then 2 dividend names are expected to raise dividend: United Health and Caterpillar. We were just talking about this rotation on value and growth. And if we're going to see some of these value names that are beat down start to come out of that basing that they've been in, right? The kind of bottom fishing, then Caterpillar is one to keep your eye on. And then for United Health, you know, that one, I have shorted that thing so many times, unsuccessfully, I might add, that when I go back and look at my journal on trades that didn't work, me shorting United Health has been one that continues to float to the surface. I never have any luck shorting that sucker. So after 12:30, you should be good with your 0-day trades. We've got a very narrow range from the overnight, and volume is light this morning. We can see the cumulative volume in the overnight is sitting at 76. So it's a little light, but we've seen these light numbers over the last few weeks, and we can't really get too concerned about it when we don't see some kind of market maker move sitting in the upper left here. So it's light, but we just went through everything on the agenda. Nothing really stands out. This is showing a lack of participation out there, and it wouldn't hurt to continue to look around and try to find why everybody's sitting on the sidelines this morning. It could be that they're waiting on the ISM numbers to come out. I mean, it could be. They're certainly not hedging against it. Either way, we can see that they're sitting out. We want to be a little bit concerned when the flows do start to come in. So keep your eye really close on the news. Watch the 10 o'clock time frame. Outside of that, we've got an MDP. It's a missed daily pivot. You can see we have not hit the daily pivot point yet. That pivot point is just a standard, basic, run-of-the-mill, everyday floor pivot. And the floor pivot is calculated using high-low close divided by 3. Now you can use another one, open high-low close divided by 4, but honestly, the outcome isn't much different, right? There's not much to be gained by using that other formula. The main thing is we haven't hit it yet. So the MDP, it's not a strategy that I trade, but it's certainly a strategy worth learning because it provides some context or some insight into what price usually does when it comes to its daily pivot point. Apple has news on their VR headset. So that's something to watch, by the way. You know, Apple is big enough to move the market. So if it flops, it's very likely going to be one more weight around this market's neck. And if it takes off like a rocket ship to the upside, then it's going to buoy the entire market. And all they've got to do, if they haven't figured it out yet, is find a way to say AI in their conference about 50 times while they're presenting that headset, and it's going to spike hard and fast to the upside. Otherwise, we've got a relatively narrow range for our Globex. And even if we do get a breakout above our own Globex high, we've still got to get outside the high of yesterday or Friday. So we're looking for an inside day breakout and a continuation. If you look at this on the daily, I'm going to say the same thing I said on Friday. Just because we're sitting at these elevated levels doesn't mean we can't continue to go up. I warned Friday, don't short this thing just because we're at the high of the range, right? And this is what it looked like Friday. And we had just started that continuation. And that's where we ended Friday. So we're kind of sitting in the same boat. We're sitting in the same situation. We had pulled back on Thursday and opened Thursday into Globex Friday down below that wick. And we needed an inside day breakout to continue. Here we are in the same situation. We pulled back from Friday's high and closed. We opened now in the Globex and we've stayed below that high from the previous day. So a breakout above the previous day, we're going to continue to expand. It doesn't have to be a mega blowout candle, but you can look back on the chart and see what these inside day breakouts offer. It's more bullish that we didn't gap up, right? A gap up is not necessarily a good thing on a Monday morning. So a gap down is great. No gap at all is fine. A gap up, I'd be not so bullish. And it's not that I'm bullish now. I'm just not bearish. If we do start to fade, then you can use Friday's candle, mark 50% of that level. That would be 42.63. And then you can do the same thing for last week. $42.35. Staying above the 50% level of Friday is automatically going to put us in a bullish bent. And if we do start to fade and see a little bit of weakness today, staying above the 50% mark of the entire week of last week is going to continue to maintain that bullish bent, right? So if we're going to get bearish, we've got to get below both of those lines. We really do have a muted market this morning. You can see how much we're just hugging that VWAP. Now we're staying above the VWAP for the most part, but we're still really hugging it. We're not going anywhere. Got a lot of wicks. It's a lot of chop. Relatively tight range. For me, the play is going to be getting an inside day breakout with an expansion to the upside, or finally breaking down below our own Globex low and retracing some of that move over the last 2 days. And with that in mind, the weekly and the daily pivot points are going to be the targets and the goals to the downside. The ADR right now is 1.1, and we don't have a market maker move, so we really don't have any expectation that it would be more than this. And with a 1.1 ADR, that would be 42.63. Well, let's call it 42.64. And then 42.40. To get there, we would have to get through both pivot points and the open from the cash session on Friday, but we would still be inside day. And we won't see an inside day breakout to the downside unless we cross through 3 different voodoo lines. 42.68, 42.44 and 42.30. So I'm not saying that we can't break down below Friday's levels, but there's a lot of lines down there. I don't really want to call them support. There's just a lot of things we would have to work through. I think it would take some news to do it, right? Without news to provide some sort of catalyst, I don't see that we could do it. So here we got the 10-day, 30-minute volume profile, and you can see how much volume there was at these highs, right? That's a lot of volume. Look at how much time we spent down here. You can see how much time we had in blue, right? That's a lot. And how much volume we had down here versus the amount of volume we had at these highs versus how much time we spent at these highs. We haven't really been up here for very long, and yet there's been a lot of volume up here. We are a long ways away from the point of control, and we've got an air pocket below our own Globex. So if we do break that Globex low, we're very likely going to move through there really fast, because there's nothing much to catch us in the way of old positioning, right? When we were talking about the volume profile, we are looking at things that have already happened. Volume is in the past, but it's noteworthy, right? And it's something to really consider. All those pivot points that I named and talked about over here, they might slow us down, but we moved through them to the upside really fast. We can very easily move through them to the downside really fast. We won't start to see any form of assistance until we get through this air pocket, and that would put us around 42.36 to when it starts to pick back up again. All right, so really this double top from back here, Monday and Tuesday of last week. All right, the VPOC from Thursday still stands, but the one from Friday, there really isn't one. It would have already been taken out right at the open, and then through the overnight session, it would have gotten hit a couple times. So we've got one below us, 42.26-ish, and nothing above us. Really, it's clear sailing. Nothing up there. Looking at this 5-minute chart here, you can really see how narrow this range is and how concentrated it is. So first things first, we would want to get a Globex high breakout. That'll give us a run up here. Focus on your distal line. I don't think that proximal line is going to stop anything. And then if we can get above that, the round number 4,300 will become a magnet. Look for an overshoot, right? Liquidity resides on the other side of the pivot. What that means is when you get to a pivot point, price is not supposed to stop at that pivot point. Yesterday's high, yesterday's low. When we run down and hit yesterday's low, price is not supposed to stop right at the pivot. It's supposed to go through the pivot and go to the other side. That's where liquidity is at. So if you're expecting a bounce on a pivot point like yesterday's high or yesterday's low, expect the bounce after it breaks the level. That's a rally base drop. Implies that there's unfinished business up here. And if we can get through our own Globex high, it will become a little bit of a magnet. We're very destined to revisit that zone. And then we would have to work through that level eating away at that resistance until it isn't resistance anymore, right? Until we can finally work through it and get past it. So we talked about the range on the week Friday, but it wasn't set in stone. Now that we're past Friday's close, we can look at the new week and look at the distance this week offers versus the distance that we had from last week. Notice where we closed, by the way, last week. We closed very, very close to the edge of the weekly expected move. In the SPX, statistically, that happens way more than it should, right? Like we kind of got an average of what a market should do. And the S&P will close on one of these three lines statistically way more than a random walk would suggest, right? You read Grimes or, one of those technical analysis books that talks about random walk and how a lot of the time the market is just nothing more than a pinball bouncing around, bouncing off of different things. It's random. Not all the time, but a lot of the time, that's all the market is doing. It's random walk. But the S&P will pin to one of these three lines more than its statistics imply that it should. It's a little bit of edge to that, by the way. Butterflies are crazy, crazy cheap for a reason. They lose a lot. Now, I know a lot of traders are hung up on winning and losing. I'm not. Winning and losing is for sports. I'm more focused on making money versus not making money. And the butterfly is a really great strategy that highlights that you can lose frequently and still make money. Because the butterfly, when you do lose, is a very small loss. And yet when you win, it more than covers the losses that you had. And all you got to do with a butterfly strategy is increase it beyond its 20% win rate. It's already a great strategy with a 20% win rate. But when you can bump those numbers up into the 40s and the 50s, you could play that, and it's perfect even in a small account to be able to play butterflies. But it's hard to play butterflies because you lose frequently. Nobody wants to trade a strategy where you lose 7, 8, 9, 10 times in a row. It just doesn't feel good. We are 1.5% above the 10-day. It's a little extended, but not too bad. So if you're looking at the move on Friday or even from last week, and you're thinking, oh man, we've run really fast to the upside, I'm going to short this sucker. I wouldn't do that if I were you. At least you can do it. Just don't do it with my money. This says we're not overbought. It says we didn't move too far too fast. We haven't outrun the 10. So it doesn't owe us a pullback. Now, I'm not saying that we won't pull back. All I'm saying is you don't want to short it from these highs based on the simple logic that says how fast we ran implies that we're now suddenly going to pull back and go the other direction. We haven't outrun that 10, so we haven't moved too far too fast. And that means it's not a short yet on some mean reversion logic. We'll get there, but we're not there yet. So if we're going to go down, it won't be because we traveled really far, really fast. We'll go down because of some other reason. This might be that other reason. So this is the 10-week, different than the 10-day. With this, we're more than 2.25% away from the 10-week. we're going to add some time to this chart and look at how often we've been at this 2.2% over the past 5 years, 4 years. We've been higher than this, and it continued to go up. So it's not an automatic short just because we're 2.25% away, but we're starting to get into that reversal area. So we can see we've expanded beyond 2.25% on the 10-week. And it's lasted a lot longer than we would have thought. Now, when we get above, say, 3.5, then we want to worry about being overbought. There's 3.5. You can see how many times 3.5 was just about the limit. And sure, there's been a handful of times where we exceeded that. If you remember last year when we were aimed for the 200-day moving average, we ran up, hit that, and we rejected off of it in August of last year. We had that just monster ripping rally from June and into July, August, and then we rejected off of that 200 period. So that was one of those times. And for every one of these, there was usually a catalyst connected to it. And there's not been very many times where we got beyond 3.5 and we kept it for multiple weeks. We've certainly had it, but it's not frequent. More likely, we'll start to top out, put in maybe a blow off top or some kind of topping pattern, and then pull back. And by pull back, all the market's got to do is pause and let that 10 get caught up. It doesn't have to go back to the 10. It just needs to quit rising and let the 10 catch up. One of those two things, or usually a combination of. So we're not overbought. We haven't moved too fast. There's still upside move range left. We're nowhere near, any kind of ceiling or anything like that. So don't short this thing just because we moved really far in the last 2 days. That's not good enough. We need more than that. All right, we got energy up, which makes sense because of the OPEC threat. If they follow through with that threat, the United States is going to be one of the largest exporters. Think about that. So that kind of puts a floor in on crude. And from the numbers that I've been seeing, a couple of analysts have been calling for 80 to 85. That's not bad. When I worked in the oil field, we knew that layoffs would start coming in if the price per barrel got below 65. That was kind of the line in the sand. You would start to worry about your job if we got below that 65. But when I worked in the oil field, the United States wasn't an exporter. And that kind of changed the game once we did become exporters. Made job security a little more common in the oil field, which is not where you normally get job security. So all the names this morning that are up are all energy connected. OIH, XOP, XLE, even nat gas is up this morning. On things that are not up, Bitcoin is down 1.9%. Bonds, looking at TLT, 1% to the downside. Gold, semiconductors, and emerging markets. We start getting into things that are below 0.5%, and it kind of loses their impact. So we can see KWeb, tech, a lot of these other ones, but I wouldn't focus on those. And in fact, I've been thinking about moving my benchmark from that 0.5% up to a 1%. I continue to drag my feet with that idea though, because I know that these big expansion days aren't going to last forever, and we're going to get back to a market that doesn't move 1% on a daily basis, but instead moves 1% maybe twice a month. So then those plus 1% pre-market runs aren't going to be so common. We still have a gap to close on the NASDAQ. So that's something to think about. If we can get above 14,575, then we can very likely close that gap and get that 14.6 while we're at it. We got the 10-year continuing that push from Friday. This really needs to calm down, right? Because we can see what's happening on the other side with ZB. We were just looking at the watch list and it said the TLT was up. But you got to be careful with things like that, because what happens is Thinkorswim doesn't do a good job with these TLT, TNX pre-market stuff. And if you're going to use Thinkorswim in the pre-market, you really want to focus on things that you know for sure are open, like futures markets. Futures are open, they're moving around, they've got flow, you can use them. You get into NY Fang, TLT, TNX, those things aren't open yet. So the reading that we were seeing in the watch list was actually from something else, right? It could have been from a number of things. I don't know why I was thinking it was up. It's down. So it's reading it right. I don't know. Maybe I need more coffee. TLT's down. It matches the watch list. It's 1%. But we can't put TNX on that list because TNX won't work until past 8. Right. So for that, we want to use the 10-year. And then once we get into the open, the TNX has a better looking chart. If I zoom in on this 10-year, you'll see it's kind of choppy and nasty, and it just doesn't get a lot of clear prints. So I'll use it in the overnight /10Y. But once we get into the market open, I just swap over to the TNX. It's got a much cleaner chart. So when it comes to the bonds, let's get out onto a daily. This is not looking good, right? We rejected off the 50, broke back below that 200, which makes sense because it's a downward sloping 200. And we broke through all the lower moving averages. So we got nothing now. And that 126 is going to be coming into focus really fast. We can see in the pre-market, we're already at 126.29. Bonds like the ZB, they use a fractional system. So this is 1/32. Right now, we're sitting at 126.29/32. And I know every math teacher out there is probably cringing, because you're going to see people that say 16/32 and 24/32. They're not reducing it, and don't get hung up on that, right? All the futures used to be fractional. Can you imagine how many traders would fail trading the S&P or the NASDAQ if they had to trade it in fractions? Thank goodness we don't have to do that, right? So 126 is going to be that last kind of hurrah before we get down into the lows of this pivot, those May lows. $125.09. Now we had a really nice impulse. So, you know, this trampled the 5-bar rule, set a nice base. So it dropped base rally. Proximal line at 125.26. There's unfinished business down here. And when we get there, we got to expect at least one first touch play. If we're going to get through this zone, we're going to have to wipe out all the liquidity that's there. And with this low, just keep in mind, liquidity is on the other side of the pivot, right? It's below 125.08. Now we take bonds out to the monthly. We've still got this really big monthly candle to deal with from back in March. So the March lows still in control. And if we get below that 125.09, the March open would be a candle worth focusing on. $124.29. All right, now for the TLT, which is a better choice during the day, especially if you don't have Thinkorswim and you have to buy futures data, using ZB just wouldn't make sense. All right, so use the TLT. We got a gap that isn't closed from Friday. And now we've got the pre-market this morning pushing us down really close to that 101 level. So all the way down here, that's a long drop from here. Could see a little bit of a rebound this morning up into that 101.5, and then we continue the move to the downside towards that 100 mark. On that rally up, if we do get that rally up, you want to keep your eye on the S&P and see if it's going to get, that'll be the fake out period, right? If this bounces and starts to rally into resistance, we're going to see the 10-year yields go the other way, right? We're going to see the TNX maybe start to pull back. That might give the S&P a little bit of a lift, but it'll be a fake lift, right? It won't be enough by itself to sustain anything. So don't let that fake you out. That might be where we get the push in the S&P to test Friday's high and then pull back off of it, right? So I think the bonds today can really be a little bit of a tell, help you navigate or at least validate the moves in the S&P. If we start to break out of Friday's high and expand beyond it with an inside day breakout, make sure it's not just because bonds found some support and began to rally. If it is, look for this to hit resistance around that 101.5. And as it rolls over and begins to fall, we start to see the 10-year hit support and start to rally. We could see the S&P come back inside from that Friday's high breakout and start to retrace back to Friday's close. So that'd be a nice short play. It all ties together, right? Oh, it's nice to be back in my office again. So semis are down. So, think of that excruciating run in the NASDAQ based on NVIDIA and AMD. But this thing has been topping out since it made that big move. And if you're looking for a play, I think you got to get out of this box first. Now, granted, it's a really wide box, so there's plenty of room for day traders, run it up, run it down, sell into strength, buy into weakness. Yeah, no problem. But if you're looking for a swing, it's got to get out of this box. We break that 165, then we've got a nice short to recover, and you could use that big day and just measure that big day. Could use something like the 786, a break below 375. Well, I rounded up 374. Could get you a short towards that 50% line in the sand, but I would use that as a place to get out or at least to close most of the trade. NVIDIA is not a short, right? Other than a short-term short. So it can have some general weakness, but until this AI craze dies down, NVIDIA is not going to die down. And that phrase, I don't know who said it. I would give full attribution if I knew where this phrase came from. But there's a chip war going on, right? And NVIDIA is the arms dealer. I love that phrase. I love the visual that it provides of NVIDIA sitting there fueling both sides of this war and making money hand over fist, selling to anybody. So until this AI situation is resolved or this bubble pops, if you want to call it the AI bubble, whatever, there's just no path to an NVIDIA short as a swing, long-term swing to try to run this thing down to like $300. This is not there. So short-term shorts only. Otherwise, I think we're going to just continue to digest at this level until we have a reason to go higher. I would be stressing a little bit of caution if you look at these lows. We got higher lows, but these highs aren't looking good. All right, AMD inside day breakout to the downside, nice expansion. We're through Thursday's level as well. And I believe that's an inside week breakout now. I just check that. Oh no, we're inside a week breakout. We closed last week on AMD at 117.86, and the low of last week was 116.6. So we've got an inside week breakout to the downside, but with AMD, we got this big candle that we want to measure on the weekly. So 115.46 is the line in the sand, and right now it's still holding. As long as AMD is holding above that red line, that 115.50, then it's not a bearish trade, right? This scoop and rise up, it very well could be just like this scoop. And then we broke above, we set a new high, pulled back, we set a higher low, got another scoop, break up, right? So this pullback could come down into, 100 or even 96.5. As long as it's still setting these higher lows, then it's all good. Short-term short. The thing is, now that we're zoomed out a little bit, you can see this linear regression line. Remember what I've said about these lines. If it moves above the line 2%, you're very likely are going to get a 2% move to the downside. And then if you get, 1% to the upside, you get a 1% to the downside. Now, it's not always going to do that. There's plenty of times where we make a move up and then we stall at the line and we make another move up. So it doesn't owe us reciprocation. But that is one heck of a move. And if we do reciprocate to the other side, then you're going to see $90, and it would still be considered bullish in a swing, right? I know it wouldn't feel very bullish going from 116 to 90, but it would still be considered bullish in the bigger picture. We're not bearish in this thing until it can get below $80, right? It's got to break this pivot from way down here. But that's the difference, though, between a bigger, longer term swing trade and a short duration take it till Friday trade. For the take it till Friday trade, it's a short below 115.5, and the target would be 103.5, trying to get down, to the lows of May, or that last week in May. OPEX week. And that would make sense too, because it kind of lines up back here. So it would be a Busby, right? All right, MU is not taking the same kind of punishment this morning. It had that down day Friday, multiple days in a row last week, where we were just kind of holding those lows. MU's got to get out of the box. So if we can break above 70.5, we got to run back up to 75. And if we break below 68, then we've got a nice short down to 65, maybe 64.5. But I like 65 better. You could basically just take this range and plot it out in both directions. That'd be your high low. All right, the SMH ETF also maintaining a range over the last 3 days. Need a break above or a break below. Pretty simple stuff, right? Nice setup, by the way. I mean, this is the market's giving us some really great opportunities to focus on. Some very clear if then statements. With that dividend release coming out on Caterpillar, I mean, look at we started talking about this at the start, right? That capital rotation from value to growth or growth to value. So all these beaten down names that are starting to get a little bit of a push from Friday. You can see how Cat had been tagging these, kind of dragging around that 205 area. And then on Friday, what an expansion, right? Well, a lot of analysts are saying that that wasn't a one-day wonder and that we're going to see that kind of expansion in a lot of these names that are good, solid companies. They just haven't been able to get off the ground, right? There just hasn't been any flows. And if you're an options trader, you kind of know what I'm talking about there. There has been no options flow in anything other than the high-tech, big mega market cap stuff, right? It's been really hard to find some decent options out there. So for everything else, maybe they're going to start to get a little bit of a lift. When we talk about bottom fishing, though, I wouldn't recommend going to junk. There's some really good companies out there that have just, like Caterpillar. Caterpillar is a solid company. It's got a lot going for it. The options haven't been that awesome. Right? Looking at, we'll round up and say 88,000 options on Friday. I mean, that's nothing. When you compare it to SPY, for an example, that had 10,750,000 on Friday, or the SPX with another 3 million, when the S&P is making up more than 20% of all of the options volume in the entire marketplace. People wonder why we watch the S&P even if you're not trading in the S&P. So look for a continuation in CAT. If we don't get it, then 50% of Friday's move would be a good target to the downside. Right now, it's just kind of holding the line, right? It's not expanding and it's not contracting. It's just not doing anything, just sitting there. Not even really getting a lot of flow yet. A break below 225 should be the start of that short, and just measure. There's two ways to run this measurement. One would be where we closed on Thursday all the way up to Friday's high. I'm not a big fan of doing that, right? But that's one way to go, and that's a legitimate measure. The other way to go would just be to measure Friday itself. Either one of those is acceptable. The thing is, when it comes to technical analysis, you need to choose one and then do that all the time. It's not about which way is the right way or the wrong way. They're both valid ways to do it. I'll just measure the candle because it's the way that I do it. And that would be 221. As long as CAT holds above 221, then it can continue this bullish move that it has started. Just trust me when I say it's not likely to be a straight shot, right? It's very likely going to be a struggle to get up to that trend line. That's a really nice TRB, by the way. I talk about trend line breakovers and how the expansion bar, which is what last week was, that expansion bar, it can make it all the way back up to where we have unfinished business. So 231, 233, right? Focus on the proximal line first. And deer usually has worse options than cat, but if we're looking at Caterpillar, yeah, you got to think deer. Then there's, say, some names like Nike. Believe me, I'm not a fan of some of these names, but Nike, trend line breakover, really nice expansion, closed a couple gaps, but look at how it stalled out. I mean, that's not glamorous or sexy at all compared to looking at what Caterpillar did. So, with Nike, someone pointed out this ratio to me, or this correlation. I hadn't never really caught it before, but now that they pointed it out, I can't unsee it. When you think Nike, think Disney. It's like they're joined at the hip. These two, one is bullish, the other is bullish. One is bearish, the other one's bearish. And you can throw into that mix Starbucks. This isn't me pointing this out, right? This is something that somebody pointed out to me, and I can't unsee it now. Once they got it in my head, yeah, I've been really amazed. So if we do start to get this rounding, right, maybe start to get a scoop pattern, then Cat, Starbucks, Nike, Disney, I'm sure there's a lot more names on that list, right? I would start with something like the Dow. But remember, Friday, the Russell was one of the two indexes that started to do really good. That and the unweighted S&P RSV, or RSP. Yeah. So Russell is a lot of financial names, small cap companies. And Thinkorswim does have all of those indexes. So you can go into where it says public and it's alphabetized. So just go into, where you want to find. There's the Dow Jones. When I was a new trader, this was my go-to watch list, right? These 30 names. Most of them are household names. Even if you don't know the ticker symbol, you'll recognize the name of the company. That made doing research on them a lot easier. You got to watch it though, because as popular as the names are, their options don't necessarily reflect that, right? Some of these have got really poor option structure. Travelers doesn't even have weeklies, if I remember right. Yeah, it's one of the few names in the Dow that doesn't have weekly options. All right, so that's what I got, guys. Look for a rotation out of tech. Keep your eye on crude and any kind of energy names. When it comes to energy, try to focus more on oil than solar and utilities and that kind of stuff. Focus more on oil, crude, even focusing on like USO might be better than XLE, because XLE has solar and transportation and it's got everything in it, right? And it's not necessarily, quote, energy that we're focused on, it's crude with the OPEC cut and everything else. So USO or individual companies. Plus, I know how cheesy this sounds, but look at what Buffett's doing. He is scooping up energy left and right. Now, I'm not saying just go out and follow Buffett. That's not trading. But if you want to see what's getting flows, because it's easier to trade things that are getting a high amount of flow, just see what he's getting into, because those names might be some of the best day trades for energy, because they're going to be getting a lot of eyeballs, which means they're going to be getting a lot of trades, and those options might have a better option structure than, you know, some Joe Schmo oil company that nobody's looking at. Everybody have a good day. Be careful, be safe. And I will see you all tomorrow.